So those watching out there, we're going to give about 30 seconds for people to come online and gather, get a critical mass, and then we'll get going. So, yeah. I said I wasn't going to say that. Anyway.
It was ingrained in your memory already.
So maybe it's a good idea. All right. Cool. Well, good afternoon, everyone, or good evening, wherever you are in the world. It's great to have you with us for, I believe this is number 5 or 6 of FundersClub Live, and we're honored to have with us today Charles Hudson, managing partner at Precursor Ventures, and looking forward to a really great discussion. And as a reminder for anyone who's new to the program here, we have an open audience. The attending today live across the globe are founders, angel investors, aspiring founders, literally from across the world. And this is an open conversation. So I have some questions that really, like, this is about involving the audience, and so feel free to comment under the video, ask questions. We have moderators pulling those questions up and surfacing them to us here on a live screen in the studio here. And yeah, let's just jump right into things. So,
awesome.
Yeah, thanks for joining us, Charles.
Thank you so much for having me.
Cool. So I'm going to start off with a very brief intro, but honestly, the questions and the conversations the coolest part of this, so I'll try to keep that brief. But cool. For those who aren't familiar, Precursor's a pre-seed, sort of classic seed VC firm, and we'll probably go into what that means in a second. And Charles is actually originally an entrepreneur. So started Bionic Panda gaming company. That company was acquired by Zynga, and actually has had a really interesting career. Most recently was at SoftTech as a venture partner, and yeah, looking forward to talking.
Yeah, thanks.
Cool. So actually, I mentioned pre-seed and classic seed. What does that mean? And could you define what pre-seed means to you? Just since semantics definitions might be ambiguous for people.
I think the venture industry is still trying to sort out what pre-seed actually means. I mean, if you go back in time, 5 to 7 years, long ago, seed was really your first institutional round. So when I joined SoftTech 5 some odd years ago, almost 6 now at this point when I started working with Jeff, I know it sounds strange to say, a big seed round back then was probably $1.5 million.
Right.
And averages were more like $750,000 to $1 million. And so there wasn't really room for institutional capital before then. It was really angels, friends, and family, or frankly nothing. And those seed rounds were really focused on helping companies get off the ground and get traction.
Sure.
If you look at modern seed rounds now, I've had 2 companies in this month raise seeds that were 3 and 3.5.
Right, and those are classic Series A rounds back then.
Classic Series A rounds.
So long ago.
10 years ago.
6 years ago, right?
And now those are today's seed rounds. And I think the market has been grasping for a term. So what do we call these rounds that happen before seed? Mm-hmm. Because seed rounds have gotten bigger, honestly, because the firms that wrote those seed checks that used to be 250, they've all done well. They've had good demand from limited partners, and they've gotten bigger. And so we're searching for terms. Some people use pre-seed. I like classic seed. I just think it's really what seed investing's always been about, and we don't yet have a new name for that $3 million seed round.
So does it, just to clarify this follow-up, does pre-seed refer to the size of the round or the stage of the company, or is it a little bit of both?
I think it depends on who you ask. I think it's more indicative of the stage of the company, but it also does have a connotation. To me, most pre-seed rounds are below $1.5 million. If you cross that 1.5 threshold, you're really getting into the territory of a round that's big enough that it could accommodate a seed investor that wanted to write a $750K to $1 million check.
Okay. So for those who don't know, I from our vantage here in the Valley, in Silicon Valley, I would say that a pre-seed venture firm's actually rare these days. I think like you usually don't hear that. That's evolved into the realm of I guess what angel investors are now, and presumably your co-investors much of the time. What as a consequence of that uniqueness, like what advantages and also like, well, let's just start there. What advantages do you have as a result of that?
Yeah, I mean, there's not a ton of people focused on pre-seed. There's the Notation guys in New York. There's Manu Kumar here, who's been doing it for a really long time. There are others who are in the process of fundraising or who are up and running. I think one of the advantages of pre-seed, and the whole reason I started Precursor, was what I noticed is as these rounds got to be closer to $2 and $3 million, it was very hard to back companies from scratch if you didn't know the founder. A, $2 million is kind of a lot of money to give to a stranger.
Right.
And B, that $2 million check that could go to a de novo company is competing with a SaaS company that has $25K in recurring revenue that you've watched grow for 6 months. And it really becomes this weird apples and oranges discussion. So I think one of the biggest advantages of pre-seed, it's probably the one area in venture where there are not literally hundreds of firms with the same strategy competing over every company.
Right.
And I think what I've noticed is for a lot of entrepreneurs, particularly first-time entrepreneurs or people who are not yet well-known, raising that first $1 million is really hard. So you kind of have two options. You can try to go find a pre-seed institutional firm that will lead and structure around, or you can try to go roll that up 25 or 50K at a time. And anyone who's ever tried to raise money that way knows how difficult that can be if you don't have help.
Yeah, for just building empathy with the audience. I mean, if you're a founder, you already know this, if you've gone out and raised, but raising that first check, getting the first person to say yes is so hard. It's like everybody likes to be in on the deal that everyone else is in on.
That's right.
Seems to be a very common behavior pattern, and to have the rare, I guess in this case, a firm or individual who's willing to step up in a serious way, it's cool. To contrast a little bit, what are there any like disadvantages having, especially contrasting where you used to be, which maybe wasn't so pre-stage, pre-seed, I mean, and
there are many disadvantages. I'll highlight a couple. One is pre-seed funds are generally smaller, which means you have fewer dollars in management fees to spend on your portfolio and to do cool things like have an office where they can work with you and to be able to have nicer events. And it kind of constrains what you can sort of spend. My friends who are thinking about joining pre-seed, it's the most activity, lowest yield way to spend your time as a VC. You're going to probably meet, if you're doing your job right, you're going to meet thousands of companies in a year, and you're going to invest in 1 or 2 dozen. And so there is a lot of activity, and you're going to meet companies at their most raw stage. So in general, you might meet companies that really have their act together, strong pitch, strong story. You'll also meet people who are still trying to sort it out. So you have to really like the work, because it frankly doesn't pay very well on a day-to-day basis, and it's a lot of effort. And the last thing is, for pre-seed to work, you have to be able to get into companies at a price that reflects the riskiness of the venture. And I think entrepreneurs and VCs are still trying to figure out, we know what seed rounds look like, $2 and $3 million on the valuations that make sense given ownership. We're still discovering, well, what's a fair price for pre-seed? Is it half of what the seed guys pay? Is it 50? Is it 65%, 75%?
Yep.
A quarter? We're still doing prices.
Because things shifted so much in less than a decade. Yeah. Huh. Fascinating. And so, like, kind of like riffing as a follow-up to that, just a related question, but from the founder point of view, given that there are, it's almost, I'm afraid to say this because it's negative, but it's almost become a meme to start a company now.
Yes.
If you're like a millennial, which I am a millennial myself actually, but it's sort of, it's this almost in vogue, right, to be an entrepreneur. So there's so many ideas being worked on, a lot of people trying to start companies at that stage, the pre-seed stage, that don't yet have the hallmarks of what a seed investor would be looking for. As one of those people, though, who, like, let's say, is actually legitimately working on a really real painful pain point or opportunity set, there's really something there. How would they distinguish themselves from all the other people to you, for example?
It's something I think about a lot. I mean, Precursor's been around for a little more than a year, so I'm still discovering things on my own. I will say this, most of the people I back, the thing that jumps out about me is they have a real clarity in their vision around what they want to build. And they have the next 2 to 3 steps of the journey mapped out. It doesn't mean that it's going to go exactly according to plan. But I know this sounds like a weird thing. I find the people I back, they have a really good understanding of the market structure, not just the market size, but who are the competitors and what are their competitors' relative advantage. So, if you're building something online, understanding that your brick and mortar competitor has this huge liability called real estate, and how do you use that, turn what's a weapon from their point of view into sort of an albatross. And I tend to find I get really inspired by people who have a vision for a company that goes out 7 to 10 years. I think if you meet enough entrepreneurs, I'll find some people whose views are really reductive. It's like, oh, this is X for Y, or we're just going to take this playbook and apply it to this new area. I don't do as many of those.
So it was a little bit like going back to the past centuries of old, where it's like, we're going to set sail for the land over there. We think it looks like this. We know there's currents in this area. We know there's winds here that might be trouble, but we think that's the right choice, but we'll figure it out as we go. Is it that kind of just awareness of challenges and understanding of the field?
I tend to get attracted to people who have slightly renegade views about the market that they're in, and that would put them maybe.
What's that? If you can share, what's a good example of that? Like a renegade view of the market.
So I invest. This is public. I invested in an autonomous delivery robotics company based in South San Francisco called Dispatch.
Yes.
I really like the founders, and when I made the investment, my investor said, "What in God's name are you doing with our money? Autonomous delivery robots? Is this even a thing?" But the founders had a super compelling vision about why sensor technology, mapping, navigation, robotics, mechatronics, all these things were coming together at this one moment in time to make self-driving urban delivery a reality. And when I made the investment, I was vaguely aware of maybe one or two companies. And now there was a CB Insights table with the 3 or 4. And in a year, it went from something that people were like, is this even a thing?
Starship Robotics,
Marble.
Robbie, Marble,
Yep. And it's funny. So I think I like new areas, because the new areas, the competitive landscape isn't as well defined, and the rules for what it takes to win aren't yet known. So I try to also find areas where I think there's just not a lot of competition, because those companies have more room to grow and differentiate.
So just as a follow-up there, it's not like, did you have a spreadsheet or a PowerPoint slide that said we're gonna find the best on-demand delivery robot company, or was it like you kind of discovered it and then that opened up the opportunity, that world? How do you?
I think one of the hardest questions I have to answer at Precursor is people ask me, so what are you looking for? And I wish I could give them a really crisp, I'm doing B2B, SaaS, in new I'm people and market oriented, so I'm a generalist. The way I met the Dispatch team was actually through a relative of one of the founders, who I was talking about a completely unrelated matter, and kind of in an offhand way mentioned, hey, I know someone who's starting a robotics company, would you ever take a look?
Sure.
So I think the most important thing for pre-seed is you have to be really open to new areas.
Right. Yeah, and that's actually seems to be an emerging trend at that stage, right? Like Y Combinator came out with some data that showed that they are agnostic to industry at that stage, and I can speak for ourselves as well at that earlier stage as well. We're quite agnostic. So cool. So this is a question actually from somebody else. This is from Tom. When looking at a startup, how do you effectively determine the market size, especially with completely novel ideas? Where there's not a research report that says the market for this thing is this big. So.
It's really hard. So I'll tell you the way I think about it. I try to ask 2 questions. One, what do I have to believe about this company for it to get to $100 million in net revenue to the company? Because I feel like if you can get to $100 million in net revenue to your company, you have a legitimate business. I don't know how big your market is.
Do you want to explain what you mean by net revenue?
Yeah, so net revenue to the company. So if you're running a marketplace and you're taking 10%, you need $1 billion in marketplace transaction volume for the company to net.
So it's in the piggy bank.
In the piggy bank that comes to you, yeah.
As opposed to just the top line numbers.
Or what flows through your platform or whatever.
Yeah.
And the other thing is I ask people a lot about gross margins, because I tend to find people who have been thoughtful about gross margins actually have thought about, well, what are the cost and revenue levers in my business, and how much room do I have to operate with those two? And that actually flushes out a lot of people. A lot of people say, well, I haven't really thought about margins. I'm like, ooh, that's...
So discipline around the unit economics and margins.
You're probably wrong, but at least we can have a conversation around the inputs and outputs of that exercise and whether they're in the realm of what I think is appropriate.
Cool. All right. So do we have, by the way, just a note to the audience, feel free to post questions on the live queue on my screen. I'm not seeing those questions, although speaking to somebody off camera here, Siri, can you move to the live queue tab? There. Oh, okay, got it. Cool. All right. Well, keep the questions coming, guys. Appreciate it. So, I guess just going sort of not related to what we were just talking about, just completely different question here. Having worked for a while with Jeff Clavier and the other folks at SoftTech, and now having been running Precursor for, how long has it been? Like a couple of
Year and a half.
Year and a half? Yeah,
Ish.
cool.
Yeah.
Do you have any reflections in terms of the largest difference for you as a VC, just like personally, day to day?
Oh, well, the biggest one is, Jeff has invested a decade in building the SoftTech brand to mean something to entrepreneurs. And it is so much easier in venture when you don't have to give the pitch on, well, it's Precursor, it's a new firm, you haven't heard of it, let me tell you what I do. It really does help when you have a strong brand. It helps attract high-quality entrepreneurs. It helps you win deals. It helps you fight for more ownership if that's important to you. And you have the benefit of working for an institution that's been around for 10 years, so all the back office works.
Sure.
Like everything works. And then you leave to start your own firm, and you have to recreate
everything.
The brand, the back office, the brand personality for the firm. And it's a lot to bite off, and I'm doing it as a solo GP, and so that stuff all ultimately kind of rests on my plate.
Got it. Makes sense.
Yeah.
Cool. Oh, okay. This might be a hard question, but are things working? It's a year and a half in. You mentioned like you're kind of in some ways there are a couple people in this space, but it's a relatively newer in this era where seed is what Series A used to be, and A is what B used, or sorry, the reverse. B is what A used to be, A is what seed used to be. And so sort of pre-seed's like the new thing.
Yep.
What are your thoughts?
I think it's too early to declare it a runaway success. I look at a couple of things, like what did I set out to prove? One, I set out to prove that pre-seed is fundamentally a different investment tier than seed. I feel pretty good about that because seed VCs send me a lot of companies that they tell me are too early for them. So I feel like pre-seed is a thing. So that we can check that box. Two, like, do the economics of a pre-seed firm work out? I have no idea, honestly. Like, it's too early to tell. I haven't had any big exits. I haven't had any huge flameouts yet. It's too early to tell. I think the third question is, can I help companies graduate from pre-seed to seed or from pre-seed to Series A? And can the companies that I choose move through that financing funnel in a way that's economically sound? So I have 7 data points that say, yes, it can work, where companies have either gone from a pre-seed round to an institutional seed round, or in one case from a large seed round to a very large Series A. So the data is early, but the thing I learned, one of the things I learned at SoftTech is every quarter, the list of winners and not winners in your portfolio, there's a lot of migration between those tiers. So it'll probably be 3 or 4 more years before I can definitively say that Precursor won.
And that's the startup
game.
It's sort
Exactly.
of like the feedback cycles are long, and you just have to move in the right direction.
That's right.
Cool. So this is a question from another Alex, not me. How important is it for you to pick so-called category winners, meaning sort of like winner takes all kind of markets, and therefore trying to find the winner takes all? And how do you do it while you're investing at that stage, the earliest of stages? Where, and you kind of gave an example with at the time, like nobody was paying attention to what has become now a space with multiple startups within it, and at the time it was sort of there was one. And,
Picking category winners is really hard. Excuse me. I differentiate between categories that are really winner take all. Like, I think marketplaces in general tend towards winner take most. And so if you're the number 4 ride sharing company in the US, like that's a tough place to be. If you're the number 4 home sharing platform in the US, like that's probably a tougher place to be. So I think in those you have to have confidence that you're betting on the team that will be the winner. I think there are other categories where the winner gets a disproportionate share, but there's room for others. So I think in B2B SaaS, customers don't want single vendor. They want choice. But the number 1 company will get a disproportionate share. So I always try to ask myself, do I think this company that I'm backing, if I back this one, I can't do any others that are doing the same thing.
Because you don't fund directly competitive.
I won't fund directly competitive companies. So I use that as a check to myself to say, if I bet on this team, I'm foregoing the opportunity to bet on anybody doing the same thing who will come into my office in the next 12 to 18 months.
Right.
And that actually helps get really serious about, do I think this is the best team? And sometimes I've met teams early, like I'll give you an example. One area is in chatbots.
Right.
Early in the year, I met a bunch of companies that I thought the founders were really strong. And I was like, I'm not ready to close the door on consumer-facing chatbots, and if I make any of these investments, that's effectively what I'm going to do.
Right.
I think there'll be new, stronger teams with the benefit of learning how consumers interact with these chatbots that will come later. So I passed on a bunch of things because I thought that the real winners weren't necessarily in that set of companies.
Got it. Huh, cool. Okay, so this is a question from Tom. What are some red flags that you look for
Oh boy.
when you're meeting a founder? So you mentioned kind of like you're kind of looking for certain things. So maybe we could address both sides of that question. It's sort of like, what would you look? What's like a good flag, like a flag of the type of founder you'd want to back and partner with, and then to the original question asker's question, like conversely, like what's a red flag? Yeah.
Good things. People who are willing to admit that there are things about the business that they simply do not know. I really respect founders who will say, we haven't figured that piece out. We're still thinking that through. We have some hypotheses, but like we just don't know how that's going to
So they have to like know their market, but also like know what they don't know.
Because you can't know everything at a pre-seed startup. There's just too many unknowns. And so I find people who are intellectually honest enough to say like, here's the limits of what we know and believe. People who understand their numbers. I know this sounds crazy, but sometimes people will give me a revenue number. I'm like, that's really a bookings number.
Sure.
Or they'll give me a revenue number. I'm like, that's a GMV number. And they're a little loosey-goosey with terms and terminology. Like, I don't like that.
Right.
So people who understand the numbers. And I think people who have realistic but aggressive expectations about what they can do with $1 million or less are also the people that I really like, where when I talk to them about, well, what does the business look like in a year, they can tell me a compelling story. It's not a data-driven story. It's a story about like, hey, we'll have solved these 3 open questions about the business model. We'll have user traction on this order of magnitude. We'll have hired some people. The number one red flag for me is co-founders who talk over each other or who generally can barely contain their discord in a meeting with me. And you'd be surprised, Alex. Maybe you wouldn't. The number of times I've seen founders talk over their co-founder, and you can just see the other person like seething while they're sitting there. And it's like, wow.
Yeah. No, it is. We put out a founder guide on, meeting the right co-founder, co-founder fit.
Yeah.
And it's, as a founder myself, also like yourself, and I'm now married. I'm recently married. But
congratulations.
Thank you. You're married to your co-founder,
You really
but they say you can't get divorced.
Right.
It's sort of, I mean, if it can happen, but it's usually kind of ugly if that happens.
It is.
And so, yeah, we definitely see that as well. And it's
I think that if I could add one more red flag, I think you have to have a healthy optimism about your ability to compete with established incumbents if you're going to do a startup. But I think my other big red flag is people who have a naive understanding of the strengths and weaknesses of the people that they're competing against at different scale. And I think you have to be respectful and informed about your competitors and like what they do well. And people who are too dismissive of
so
the
you can just be like, oh, they're like a big company.
They're
so
a big company.
They'll
They'll never figure this out, or they're just another startup. They're not any good. Well, I'm looking for a little more than that.
Sure. Okay. Cool. So let's see. Go to a question from Siri. Does founders' previous experience, i.e. demonstrated ability to build companies in the field, does that become especially important at the pre-seed, and do first-time founders miss out, or do you is it an equal playing field for people without industry domain like experience and people who are like totally new to that industry?
That's a hard question to ask. It's a very good one. Whoever asked that, that's a good one, because it's something I struggle with. I think that there's some industries where the lack of domain expertise can be fatal. Like, you have to understand, there's some contours of digital healthcare. Like, you just have to understand that there's some things you're just not allowed to do, or your company will get shut down.
Yeah.
But I also think there's some things where everyone in the industry has a pretty conventional view, and to do something revolutionary or new, you have to be an outsider. So I've made 3 investments in insurance companies. None of the people have ever worked in insurance ever before. And I think it's because, in my experience, insurance is a relatively low NPS category. And so if you were to build the insurance company that people from the insurance business would build, it's probably not going to be terribly, like I look at one of my favorites, I'm not an investor, but I think Metro Mile is like an amazing company. The people who built that were really smart, thoughtful market designers, not necessarily deep auto insurance.
Folks. So it sounds like it has a little bit to do, your answer to that question has a little bit to do also with like what the market is, what the founder's product or service and market is.
And what the strategy is. If the strategy is we're going to do something really different versus we're going to make meaningful improvements within the status quo, then I'm looking for different teams.
Got it. Cool. So question from, again, another Alex. You mentioned bots. Are there other industries that you're kind of interested in the way that you were like looking at the bot space recently? Is there anything else currently on your radar that your interest is particularly piqued in?
I've made a bunch of investments in women's health, which is not an area that I had targeted. I just met a handful of really impressive entrepreneurs in that space. So it's funny, in venture, you make one investment and then people find out and they assume that you like the category and founders notice. And so you start seeing more things in and around that category. So I would say insurance, women's health are 2 where I've probably done significantly more than I thought. And I came into Precursor saying I was not going to do a lot of things in and around education. I've done a lot more in and around education than I had planned. It's mostly because I've met a bunch of founders. My holdup with education has always been, how do you actually get paid as a service provider? And I've just recently met a number of teams that I think are either going directly to the parent or directly to the student, and they're showing, even with early data, that people will pay.
I was about to ask, is that like, are they going outside the existing educational system or within it? Got it.
And so I've ended up with more investments in that category than the original model would have suggested.
Cool. All right, so we're on the tail end of this. It's been a fascinating conversation. I think we have like more questions than we'll have time for, but this question came up here. Basically, I'm not sure who it's from. I think it's from an audience member. But how do you evaluate startups in unfamiliar or new markets, especially international companies? So startups that are not based here. Maybe is that something that you address? Have you funded international companies?
I have 2 Canadian investments, and Canada is in fact a different market than the United States in a lot of ways. But I've told my investors I want to be able to visit the companies that I back and get there and come back in the same day. And I just don't think I know enough about the European startup scene or the European business market to be, or Asia or LATAM for that matter, to be a really effective, helpful investor. And even more than being helpful and effective, I just don't know what I don't know about those business environments. So typically, I'll refer them to other folks that I know who are just savvier or better at doing that.
So there's like a global network of Charles Hudson's and addressing other markets.
I've got friends who will take a look at those.
Cool. All right. Well, I think that brings us to our conclusion here. It was an awesome conversation.
Thank you so much for having me. It was a pleasure.
I really
enjoyed it.
Yeah, and thank you again to the audience for watching and tuning in. We'll be back next month. So, thank you.
Thank you.